All right, welcome to the Nadex Application and Strategy webinar series. My name is Daryl Martin. I'm with apexinvesting.com. I'm a trader just like you. Apex Investing is a community of traders where our motto, or whatever you want to say, is traders helping traders. So it's traders constantly giving ideas, helping out newbies, advanced guys helping out other people. We're constantly trying to grow, myself included, as traders whenever we trade on Nadex or whatever else it is that we're trading on. We have futures traders, Forex traders. We have a lot of traders that use Nadex to hedge, using spreads. And there's just a lot of different ways that you can trade on the Nadex exchange. And so we'll talk about a couple of those today. But mainly what we're going to do is we're going to focus just on the Nadex binaries tonight. All right, so let's get going on that topic. First thing before I do anything, as I go in, I just got to put the disclosures up there, and I got to put, trading involves risk. Make sure you know what you do before you do it. You are responsible for your own decisions. This is unique information provided by apexinvesting.com. And then, the other standard risk disclaimer: futures, options, swaps, etc. involve risk. They may not be suitable for every investor. They may result in a financial loss. Any trading decisions you make are your responsibility. So this is for informational purposes only, not an offer to buy, sell, solicit, etc. A financial instrument offered by Nadex. Past performance not indicative of future results, etc., etc. The one nice thing about this disclaimer is you'll notice every instrument traded on Nadex itself has defined capped risk, meaning you can't get a margin call. So your maximum risk is fully collateralized up front, so you don't have to worry about end up owing more than what's in your account when you place a trade. Now, there's a couple places. First place, actually, I'd tell you to go is hop on over to nadex.com if you don't have a demo account. Question comes up, can I have a demo and a live account at the same time? Yes, you can actually have both. So, Jay, you can get both of those set up. To get a demo account, go to Trading, and then go to Demo Trading Account right there. Fill in your username, your first name, your last name, phone, and email address. Click Apply for Demo. You'll get an email right away, and you'll be able to go up here and click Log In, and you'll be able to log in with your account. Once you've done that, and you'll probably get that demo extended. It's good for a couple weeks, but you can get it extended for a year at a time. All you need to do is simply create a live account. It's only $100 to fund a live account. Obviously, when you're going to go live for good risk management, you probably don't want to do more, even though you can do trades with just $100. But again, for proper risk management, we probably want to do more than that, depending upon the strategy you're doing. But the only requirement is to fund a minimum of $100. It's a deposit. It's not a fee, okay? Put that money in. If you place one trade, whether you place 100 trades, whether you place a trade with 100 contracts or one contract, whether you have $5,000 risk or $3 risk, if you place one trade in your live account, by the way, which only takes about 5 minutes to set up, okay? Very fast, very easy. Then you can contact Nadex customer service. You can call them, you can email them, and they'll extend out your demo account for 12 months. Okay, so it's not just opening it, but it's funding it and then doing it one live trade. They'll get that demo extended for 12 months, and I use my demo all the time, and highly recommend that you have one, just to, if nothing else, just to test out all those ideas that we get as traders, right? And there's a lot of great information on the Nadex website. Now, another resource for you is apexinvesting.com, okay? And if you go on over to apexinvesting.com, and I'll give you the two links here. So here's a link to create an account. I'll give you that link. And then for the demo trading account, which honestly you should do right now. If you don't have a demo, like now's the time to go get it. It takes you literally about 15 seconds, okay? And then if you go over to apexinvesting.com, send that link to everybody. Then click on the Get Free Access button. No credit card or anything like that required. I do daily live market commentary. I go into the news, the federal, whatever the government news announcements are throughout the world, how they're going to impact the market. I talk about them. There's a lot of ways you can use it, whether you trade the news or whether you just use it to know when the market may be flatter or more volatile. So a lot of ways that you can use the news. We have forums. We have live Nadex binary scanners and spread scanners. I have webinars every Thursday morning. And there's a lot of other trading tools, deviation levels, and a lot more that you can use. And once you've done that, you just click on Member Login. Once you've logged in, Then you'll go to the home page, and under the home page, you will see a few areas you're going to want to check out of the gate. If you're new to Nadex, even if you've been around for a while, but you're not sure you got all those little details down, you're going to want to go on down here to Nadex tutorials. And some of these, as basic as they are, they have that one piece of information maybe that you're missing. So they're worth your time. Most of them are short and like 10, 15 minutes. And you get started with Nadex, how the platform works. There's little things you may not know about the platform. There's even more stuff added since we did this video. So we'll probably have to make some new videos to add on to that. But they're small, and I do cover them in other videos and other webinars that we've had. Nadex spreads, if you want to know about those. Spreads and binaries are completely different instruments. They are not the same in any way, shape, or form. So if you have a trading background, you're probably going to be more attracted to the spreads, just because they are more like just a call or put type option. Binaries, a little bit different. They have a lot of ways that can be used. They can be used for premium collection, for large moves, for range-bound markets, for breakout markets. Like you don't know what way it's going to go, but you think it's going to move big, like say a news announcement's about to come out. So a lot of ways that you can use them. They're also really good for those of you who maybe trade at night. Maybe you're looking for something that will allow you to take advantage of markets when there's lower volatility, like in the evening, or maybe you want higher volatility. Like I said, they're very versatile and they can be very timed. Like maybe you have a day job, and then you come home and you have a couple hours with the family. Maybe you have an hour you can sneak away, right, and hop on your computer and play some trades. And you got to get back to the family, got to go to bed, whatever. Binaries might be a better solution for you in that scenario. So. Also the news trades, because they're pretty simple, and you set them out there. We do a lot of spreads on the news trades, but a lot of them are just set them down and let them do their thing, because you know exactly when they're going to happen, right? You know when this announcement's going to come out. And so we talked to you about a lot of that, but right here in this Nadex tutorial section, that's going to be a great place for you to get started. From there, hop into the webinar recordings. The Thursday webinars, I'll cover a variety of topics. Okay, it's very open Q&A. Sometimes it's very topically focused. Other times, it's literally just 100 different questions. And I'm just going through it at that one time in the week where if you got questions, you can throw them at me and we'll just knock them out like step by step by step on just all sorts of topics. And then, bonus webinars. So bonus webinars, these are like the Monday night webinars that we're doing right now and some other webinars I do. So like last week I did Nadex Binaries Made Easy. So if you don't even have a Nadex account, you don't know how binaries work, that might be a place you want to go. I got Nadex spreads made easy. I got tips and tricks and misconceptions on Nadex spreads. I got how to choose the best spread. We got straddles and strangles and, on down the list. There's just tons of content right here for you to take advantage of. The big warning I'm going to give you is don't feel like you have to master everything to do anything. Okay? They are options. That means you have a lot of choices. And the first thing is just to get, how does a binary work? And how do I make sure I get ahead of the learning curve by not making incorrect assumptions? And then let me pick a system. A strategy is like a strangle or a butterfly or buying or selling out of the money. But a system is when do I actually get in? When do I get out? Okay? And how do I read the market, that style? And what contract do I select, that scan? And you'll see these kinds of steps laid out in the trading question forum as people have questions about different sections, where I go into like sanity right here. This is going to go into areas like money, psychology of money, psychology of trading. Steward, that's going to go into your money management, your schedule. What time can you trade? What do you need to trade? How do you set up an account? How much? Where at? Where do you get data feeds? Stuff like that. Socialize. This is interacting with other traders. That include the forum. Chat rooms, trade rooms, things like that. Study is, how to actually get, your indicators set up and get your charts set up. Strategy is, what am I going to do when XYZ happens? Okay, well, I think I want to buy a binary. Okay, what are going to be my exact rules for doing that? For getting in, taking profit, getting out of the trade, and now, what other factors may I need to consider? Like maybe the news is about to come out. So my system says buy, but Fed funds rate comes out in 3 minutes. I might need to think about that twice. Scan, what contract am I going to choose? Which one? There's 10, 20, 100 different contracts available at any given time. Which one am I going to choose? And then put it all together and then go back and go, what I do right that I need to repeat? What I do wrong that I need to not repeat? And what did I learn today? So It's just taking that moment to go back and reflect on your trades. And so the idea is basically anything you learn from any book, any webinar, anywhere should belong somewhere. You should be able to classify it somewhere. What am I learning? Am I learning strategy, which is just basically buying or selling or combining them in different ways? Or am I learning system, actually where to get in and get out? Or which one to choose? And so that's sort of been my goal as we built this S12 forum up, is to try to categorize all this information more and more and more in a way that makes it easier and easier as we develop it to a way that you can use it. Another area is we have a course right here about how to get set up with charts and live futures and Forex data. Okay? One of the big misconceptions, we'll be talking about that, but one of the big misconceptions is people go in and they don't look at the actual underlying data. They maybe look at that indicative on Nadex, or they have some web charts. There's a lot of free web chart programs out there. That is not what the price is based on. Okay? So we need to be looking at the underlying market. We need real volume. We don't want gaps in our data, like when the exchange may be closed. We want to have real charts, real volume, and I know a lot of Nadex traders are starting with smaller accounts, so I'll show you how to get access to all that data for free. Okay? All the courses are free, but that's where you definitely want to get started. Now, what about making it easier to trade the binaries? Well, we have a scanner along with tutorials on how to use it. And we'll be covering this a bit today, but we'll be going into the binary scanner, and we'll talk about some of the misconceptions, some of the ways to use this, some tips and tricks, but won't be the total focus today. A lot of times we focus on this and help you really learn a lot of different things, but you can trade from your live or demo just by selecting live or demo at the top. They'll be able to pop up that says, hey, install the plugin. If you install the plugin, then you have to log into the Nadex demo account or log into the Nadex live account. If it says you're not logged in, just log out and log back in to the account. And it'll basically make the two browsers talk, okay? And if you're trying to figure out how to use it, just check out the help section. That'll help you out a bunch. We also list the contract, like on NinjaTrader and on other platforms right here, the actual contract that you type in to be able to look at it. So if you're trading, say, the NASDAQ, what instrument should you be entering in, like NQ space 06-14 or NQM4. So to help make that a lot easier. And Nadex information. Very helpful place. You can go over here. This is like when rollover happens. So you're going to want to know about this page, right? When to change your charts to the next, contract month. What all of the current contract months are for the futures contracts. Links like how to find contract specs, position limits, results. And then over here, the rollover dates for futures. So if you're using futures data, like we use futures Forex for our volume when we trade Forex. That's one of the reasons I don't use MetaTrader 4. Is that most brokers out there, you cannot get a data feed for futures into MetaTrader 4. And I want to be able to look at the 6E Eurodollar futures when I trade the Eurodollar spot, because the volume on MetaTrader 4 is fake volume. It's tick volume. It's how many times did the price change. So you want to use real futures Forex volume when you're trading spot Forex so you can get an accurate assessment of the volume. One of our indicators actually will go in and just automatically pull the futures volume when you pull up an FX pair. And it covers, about 30 different FX pairs that you can do it on, obviously including all the ones on Nadex. All right, so that's a bunch of, all that's free, okay? Even important, support resistance levels, deviation levels in the market. We list all those off on all the Nadex, or most of the Nadex markets. We have some other ones that are built in, to our indicators and stuff, but it's right here free on the website that you can access. And I just wanted to let you know where you can find information. I know that was a lot, and I am recording this. But just education, and then again, webinar recordings. It'll be right here under bonus webinars 3 or 4 when 3 fills up. Like we put so many webinars in there. So that fills up, we'll make a bonus webinars 4. And that's where we'll put this webinar for you to be able to review it. It ought to be up there probably today or tomorrow at the latest. And tomorrow by close of business, no later than that, or close of market. But anyway, so you know where to access this to go back and check some stuff out. Okay, so now that we have that knocked out, where to get the demo, where to get the live, where to get more information, let's talk about what our topic is. We're going to go into tips and common misconceptions that traders have about binary options. We're going to talk about how Nadex binaries are different from overseas binaries. We're going to talk about regulation versus simply registration and why it's really important to you. We're talking about exiting before expiration versus holding to expiration and why it's really essential you do this. We're talking about common misconceptions about binaries that may be holding you back. and just some of the top tips on trading on Nadex. That sound good? That was a lot. I'm like, gotta catch my breath now. Okay, so if you have questions, I want you to encourage you. I've already got some in here that we've answered along the way. But if you have questions, I definitely encourage you to post them there in the question panel, and I will get to them either while we're on topic or free. If it's not on topic, I'll still get to it before the webinar is over. Okay? So I just don't want you to not post it or get frustrated because you think I'm not answering it. So I definitely will come back and be happy to answer any questions that you have. Okay? And a lot of them I'll be able to answer them as we go. So first let's talk about how are Nadex binaries different from overseas binaries? Well, there's really 10 factors you want to consider, and I actually cover this in one of our videos. So I'll go through it sort of lightly, and I'll show you where you can find this information on our website, where I go through it again. But right here under Education, Nadex Tutorials, and Getting Started with Nadex, one of the videos I talk about is basically why Nadex. So like why Nadex binaries. And I go into this in more detail for you, and I give you the math and everything behind it. But one of those is just the deposit location. Nadex, I think they're always updating their site, and I think they just added a section over here called Why Nadex. And they have actually a lot of these things that I put together. But, they list a lot of the different areas. But one of them is deposit location. Where is your money actually deposited? It's here in the U.S., okay? It's put in a segregated account. That means they're not considered company assets of Nadex. They are trading capital of members of the exchange, which is you and I, and therefore they're not put at risk in the sense of like a creditor coming and saying, hey, Nadex, you owe us money. So it's a very important thing is that those funds are segregated, okay? As far as, over-the-counter versus regulated, we'll talk about that. You can get a free demo account. Some brokers try to make you pay to even look at the platform. So now you can get access to a free demo account. You can get that obviously extended just by getting live and doing a trade. But very, very simple. But at least you can try it out for a couple weeks at no cost. Some of the things you want to be aware of on over-the-counter binaries is what we call bonus games. And I'm sure there's a few of you that have probably been subject to some of those. I hear stories constantly. And, they may put it in the fine print, but it's still in the really, really, really fine print. That's where these non-U.S. regulated binary places will say, hey, if you put in 1,000, we'll give you 1,000, which sounds pretty cool. You put in 5,000, we'll give you 5,000, or whatever the number is. Is that as good as it sounds? Not so much. Because they'll usually have a requirement with that. They'll say you got to trade maybe 20 times the account size. So if you put in 1,000, you got to have $20,000 in trades before you can pull a dime out. Now, others have got smart to this, and they know that people are catching on, and so they've added, no, we let you pull that money out anytime you want to. Anytime you want to pull out your money, you can pull it out. Just the bonus money has the requirement. But they don't want to really answer the question of, well, if I make $1,000, can I pull out two? Did I make that with my money or with your money? If I lose $1,000 and I make $1,000, did I lose $1,000 of my money and make $1,000 on your money and I can't pull anything out? I mean, there's how does that even work? That's obviously not allowed in the U.S., and for very good reason. So if you start hearing the bonus games, that's a good sign to be aware that you might want to reconsider whether or not that's where you want to be trading at. So Nadex doesn't have the bonus games. What about locked versus unlocked binaries? Well, this isn't something that's not on their page, but it definitely should be. I think it's one of the biggest benefits, and it's the fact that you can open and close a position before expiration. You don't have to get into the trade and hold it until expiration. It is hard enough to figure out that a market's going to go up or stay flat or go down, right? But saying it's going to go up and stay up above this price until this time is very, very challenging. And, time and time again, I see traders come in. I'll see even services pop up now and then where you see that they don't close before expiration. And it's just understanding the probabilities, the way they're laid out. If a binary costs $70, there's a 70% probability it's going to expire in the money. So if I buy that, 100 times, 70 times I should make $70, 30 times I should lose $70. So sometimes I should make 30 times I should lose 70. That would mean I'd net zero, not accounting for fees or spread or whatever else. So you really want to learn how to open and close a position before expiration. And there's all these lockout times. There's a lot of little things to be aware of, but you should be able to enter and exit a position before expiration. Okay? If you can't do that, that's not something you want to trade. You're buying and hoping, selling and hoping. Don't get into that. Another thing to look at is settlement. How do they settle their markets? Some of them will settle it based on something like an index, okay? Like, say, the SPX. And they're like, well, the SPX, that's the major S&P 500 index. That sounds good, except for the fact that it gaps like crazy because it's an index. It's an average price of all these stocks put together and a nice little formula that they put into that. And it's not really a good way to settle anything and basically say whether something's in or out of the money because it has gaps, whereas Nadex uses real traded markets, such as ES, okay? They use the futures markets because those markets are open more hours. So you can start trading at 6 o'clock at night. You don't have to wait until the next day. When the cash market, the SPX opens at 9:30. Some will use like the last trade. Well, the last trade, who can't go in with a computer and just fire off a trade at the very last millisecond and manipulate the settlement price? And who's to say which one happened and how that worked out? But if you can get a independent data feed like Reuters, and you can have a average settlement, which is what exchanges use, where they'll use like the last 25 trades on futures will average the middle 15. That way, somebody can't easily manipulate the market because you're talking about the last 25 trades down to the millisecond, okay? And then averaging the middle 15. You'd have to fire off a lot of orders to make sure you got those last 25 and take on an exorbitant amount of risk, therefore making it not worth it to try to manipulate it. Forex, they take the last 25 mid prices. Because if you take this like the last trade, well, Forex can have massive bid-ask spreads, especially depending upon what FX data provider you're using. And so make a jump 10 ticks, 5 ticks, 3 ticks back and forth. Okay? So, you don't want to be stuck with something that's not using an average settlement price. So that's one of the big benefits. Sometimes the average settlement can bite you. Okay? Because on your chart, it looks like it's above it. We've all had that. Of course, we've also had on our chart where it looks like it's above it, and we went short and we still were profitable. We've had it where it looked like it is above it, and we were long and we lost on the trade because the settlement was below it. But it is an average, consistent settlement price. So it's a very, very important thing for you to be aware of. Where does that settlement come from? And also to understand that on the platform, if we go over to Nadex itself, we look at it and we open up a contract and it has the indicative index here, that is not the official settlement. It's an index. Okay, it's using the same formula, but it's web-based. So it's going to, have could have a couple seconds, milliseconds, whatever delay in it for a second right there. So it's not the official settlement price. It'll be close, but it's not the official price. So that's another, common misconception. And I just want to make sure you do understand what that is so that way you're not counting on it. When it comes down to the last, few minutes, that's when I start looking at this indicative to get an idea of where it's really at. Okay? Beyond that, I'm looking at the actual charts. I'm not looking at the indicative itself. Underlying instruments. They got, future indices. They got international indices. They have Forex spot markets. They have the commodity markets. And again, they're based on the actual contracts traded on like CME and ICE and the SGX, the Singapore index. So it's important that you understand what the underlying market is that you're trading. So that way you're not looking at the wrong chart. Like maybe if you're looking at the CME Nikkei 225, you're looking at the wrong chart. It's not the CMEs. It's the SGX. It's the Singapore Commodity Exchanges Nikkei 225. It's not the SPX. It's not the spiders. It's the ES CME E-mini futures. It's not IWM ETF. It's TF for the small cap 2000. Now these are listed on their website, but to make it even easier, like I said, inside of our scanner, we list the exact contract month for you based on their schedule. And so like I said, very simple, easy to find. You just pull it on up if you're not sure. And go over here. Click on scanner. Click on either binary or spread scanner, either one. Okay? And then scroll down, and right at the top, it's a little harder to see on the binary one. Let me zoom in for you. Right here gives you the generic symbol, gives you the NinjaTrader symbol. If I select a contract like oil, Okay, it'll show me the oil contract right there. If I'm on the spread scanner, we give it a little more detail because it's more like, trading an option or trading the underlying market. And so we have a whole section down here. Let me pull up oil. We actually define the market for you. Okay, and we talk about how does it tick, how does Nadex tick, what's a tick worth. That's on the spreads. But you really want to make sure you are trading the right underlying market when you do this. Okay? All right, so that's making sure you have the correct underlying market. Also, something that will happen on the overseas versus Nadex is they have like just fixed strikes, where in the sense of it's where's the market, buy or sell. Okay, and if it's a tie, it's not. You don't get it's a push. Okay, or I mean, different ones have different policies, but most of them, if the market ends at the strike, then it's a push. Nadex, it's a defined contract. If it's greater than the strike, the buyer will be profitable if held to expiration. If the underlying market expires greater than where the strike is. If it's less than or equal to, let me show you what I mean when I say this. So right here, if the market expires greater than 95.80, then the buyer of the binary would be profitable if they held to expiration. Again, I state they shouldn't, but if they did. If it was at 95.80 or less, okay, then the seller of the binary would be profitable. So there's no push, okay? It's just either you're above or you're below, you're in the money or you're out of the money as of expiration. Now, this gives you a massive advantage because not only do you have the binaries that are at the money, like this example right here, but also if we go in and we look at maybe a few more contracts, we'll pull up, say, Aussie Yen, 3 o'clock, you can do in the money contracts, which means the market's already greater than your strike. So like 95.40, the market's already at 95.77. If it stays there, the market just stays flat, you'll be profitable as a buyer. If it goes up, you'll be profitable. If it goes down but not more than, 37 ticks, then you'll be profitable on the trade. Most places overseas, you cannot do that. If you do that, it would be like a weekend trade, and they have touch binaries and things like that. Okay, you can do a touch binary whenever you want to on Nadex. You just go in and you buy the thing at 22.50. When it hits 96.20, you sell out of the trade for about $50, less bid-ask spread, so a few dollars. So if I bought it for 22 and I sold it, let's say 43, great. Okay, I made $20, a little over $20, $20.50 on the trade, entering and exiting the trade before expiration. I can do that whenever I want to. I don't have to wait for weekend touch onlys. That's another thing I read on a what I call bucket shop binary place recently, is I saw that they had these touch binaries, but they only considered it a touch if it was at that price as of like 3 o'clock. So if it was above or below during the day, it didn't count. Only if it was at the price as of 3 o'clock. Again, different ones have different rules, but all that little fine print. With this, I can get out when the market hits my strike. Okay? Very easy to do. They'll be more liquid at that point anyway. So, again, just variety of option choices. You want to make sure you're aware of that. You can buy, you can sell, you can do range bound, you can do breakout. I could buy above and sell below. I could buy for 20 and hold the thing and make $80. You'll see, 80% payouts, and that sounds so great. But who can tell me what my payout is if I buy this $22 contract right here, expires in the money? What is my percent payout on that contract? So yeah, I got a great question that pops up. Can you show me how I buy at 22.50? So right now the market's at 21.50. So I'll just buy it at 21.50. Okay. I hit place order. Oh, went into working. Market moved right then. Okay, there it goes. Got filled. Market oscillated back down. So now I was in working orders. I got filled. And now if I want to get out, say at, let's see here, what do we got? Can you buy at 22.50 and sell at 50? So I'll just hit sell. And what I did was I clicked the green arrow right next to it. And this is covered in the Nadex Basic series that I went over with you there at the beginning. But it's going to sell, type in 50, and hit place order. And now when the market goes up, then if the market basically gets up to 96, a little bit above that if I sold right at 50, so I'd be better off selling like at 43 or whatever, but a little bit above that, then I'll get filled on my strike. and I can let that order sit there and work. I don't have to be sitting here to place a limit order. So a question that did pop up: what would happen if I did? I asked this a second ago, and go in. Let me pull it up. But somebody already pretty much right on the money there. So right around 400%, pretty close to 400%. If I go in and do this trade, this $20 trade. So if I go in and go, okay, well, if I made, let's do this at one contract. Okay. So if I went at 21.5 divided by 78.5, oh, whoops, 78.5 divided by 21.5. So it'd be 364% return on my trade. So don't get impressed when you hear 80%. Okay? There are 80% trades on here. There are 20% trades on here. But, I mean, there are also 1,900% trades on here. You know, go in there and do 4 divided by 96. Or 96 divided by 4. I always do that backwards. 2,400% profit. Okay? 2,400% profit if you bought it for. Now, is that a good idea? No, that thing's way out of the money. The probability of that thing getting there, slim to none. But the possibility is at least there. Okay? So, also, if you think about it, if I go in and I do a trade and I can only make 80% when I'm right, but I lose 100% when I'm wrong, or maybe, 70%, whatever. Well, that means that I'm going to lose $20 no matter what. So put $100 up, they're taking 20, whether I win and I'm profitable, or whether I lose. Because they're going to give me 80 if I'm right, if I held the thing. I'm talking about the over-the-counter binaries. They're going to give me $80. So I got to be right quite a bit more often. And it's a 50, it's not even quite 50-50, but it's basically a 50-50 trade. Is it going to be above or below this strike? Because if it's added, it's a push, right? So on a less than 50-50 trade, I'm getting less than a 1-to-1 payout. And that is usually your main or only choice. Not necessarily the best thing for you. Okay? So definitely check this out. So you can understand that. But Lorenzo, so hopefully you got that there. And but yeah, right on. You were right on, spot on, Lorenzo, on the profit. Let's see. I got a question here from Serini. Hi, Daryl. I have a question for you. I was using my demo account and I bought a contract. Say, for example, the maximum loss is $500. So we'll do, 25 of these. Okay. And profit is, say, $400. Okay, so not quite that contract. But automatically, $500 is taken out. Correct. So, because it's fully collateralized. So whatever amount you put up, that amount is taken out of your account. Because they make sure both sides, the buyer and the seller, are both putting up the full collateral of the trade as soon as the thing is executed. So automatically, $500 is taken out from my account. What if the contract holds true? I'm guessing meaning that it does what you plan on it doing. How much will be credited back to my account? So if you bought a contract for, we'll just go over here and use this one because this is a little closer to your example. And you bought 10 of these for $510. Okay? And it expired greater than 95.80. Okay? Because if you bought, you're saying it will be greater than 95.80. So let's just say if you did hold it, again, don't recommend it, but let's say you did. If you did hold it, you'd get back a payout of $1,000. Okay? So let's say settlement payout, $1,000. What does that mean? Well, that means that you got a payout of the $510 you put at risk, okay, and the $490 profit that you made on the trade. So the risk would be returned to you, plus the profit would be returned to you if it expired in the money. All right? Now, obviously, the fees are also deducted out, so they're 90 cents a side. And then they're $9 cap. So if you do one contract, it's 90 cents. If you do 5, it's $4.50. If you do 10, it's $9. If you do 100, it's $9. So obviously, as your positions get larger, your fees get smaller on a per order basis. Okay. But yeah, that settlement payout can sort of be tricky because you see it and it's like $1,000. What? So it's like, no, you made $490 plus you got your $510 back. And then you'll see that difference, less the fees credited back into your balance right away as well. Okay? You bet, no problem. Let's see here. Going in, just looking to see if I got... Yep, so far, caught up on all of the questions. So So we talked about the risk-reward ratios. We talked about how you can go directional, neutral. We talked about a lot of advantages on Nadex. They got the short-term expirations. Okay, this is something I hear all the time. Big misconception. Yeah, but on Nadex, you can only do those dailies, or only those weeklies, or only those hourlies. You don't have to, and again, shouldn't hold the contract until expiration. Okay? Market goes up, you buy. You get out of the trade, you sell it. You think it's going to come back down, you sell it. Comes back down, you buy it back. You could be in the trade for 15 minutes, for 5 minutes, for 15 seconds, for 1 hour, for 5 days. Okay? Just because the expiration is an hour or 2 hours or a day away doesn't mean that you can't enter and exit the trade as many times as you want to in between it starting and expiration. Okay, so only having an expiration every hour doesn't mean that you can only do a trade every hour. There are multiple times where I will do multiple trades on the same contract, or at least the same market, in the same hour. Because I'll do an out of the money. I'll buy it. It'll pop up a little bit. I'll take profit. It moves up a little bit more. And then all of a sudden it starts to move back down. Now I'll sell that same contract, but now it's an in the money contract. Moves on down, I take profit back. Okay? So you're not limited to how often you can trade by how many expirations are there. That's just when it's going to expire. That's not when you have to wait to get out. So very big misconception. Usually coming from trading binaries overseas or looking at those, binaries. I actually have a series I put up on Yahoo Finance has picked it up on binaries, and you can just go over and type in Nadex. And we also post these in our forum now, so we're starting to get all these loaded up in here. But I go into like common misconceptions and different things that people think about, don't know, understand. But just a lot of different binary option articles you can check out. They're also, like I said, inside of our website. So to show you that, right over here, if you go to apexinvesting.net and you go again to the forum, we got to have most of these caught up pretty soon. But over on the right, we've got a whole section of just articles, okay? And so like I said, we're adding those in. We'll make that a little bit more visible section soon as we get them all caught up and in there. But a lot of them I go through these misconceptions that traders have. And they're short articles. Most of them are about 500 words. And I'm just focusing on sort of one concept. And we're trying to do 2 to 5 of those a week and get those out there. Just as little short, easy lessons that you can digest. Okay? Let's see. What else do we have that you want to be able to... Like I said, we got flat markets. We got spikes. So you could buy a contract. It could fly up against... Or it could fly down against you and then fly back up. And you could still be potentially profitable. They are legal for U.S. residents. They are regulated by the CFTC. Okay, CFTC, Commodity Future Trading Commission. They oversee the CME. Okay, Chicago Mercantile Exchange. That's where the S&P E-minis are traded. The CME group oversees Globex, and that's where you got gold, you got oil, and the CBOT, all that stuff coming under one group, the CME group. So CME oversees that. CFTC oversees that. Just like they oversee CME, they oversee Nadex. And that's a very good thing for you. It's regulation versus registration. Okay? I've noticed a lot of these sites are like, hey, we are regulated. We're the newest regulated binary, da-da-da-da-da. Yeah, how do I put this? Sort of like the Better Business Bureau. Okay? You can be registered with the Better Business Bureau. What does that mean? That means that you submitted some bio on your company, you paid a fee, and you respond to complaints. But if you don't care to submit a fee, okay, you're not registered with them. If you don't want to respond, you don't have to, and they really have no authority over you. Okay? So, is there a regulatory body that actually has teeth behind it? Where they can do something about it? And whenever things happen, they can come in and they can work towards recovering funds. Where they can make sure things on the up and up and the rules are being followed. Okay? Can they enforce something for you as a U.S. citizen? Outside the country, it's a lot harder to do. Okay? So, that's a massive, massive benefit. When trading on Nadex, is you're actually trading on a regulated exchange. Now, one of the concepts that will come out of trading on a regulated exchange, people go, well, who's making the money? Is Nadex trading against me? No, it's an exchange. That's another massive benefit. Okay? You're trading on an exchange, which means an exchange is there to facilitate the transaction. Almost think of it like Visa or MasterCard. They charge a fee, a percent of every transaction. When you swipe your card at 7-Eleven or at Denny's or Sears or wherever you're at, when you swipe your card, that company pays a small fee for every transaction. Because what they did is they brought you, the buyer, and the seller together and made that transaction easy to accomplish. Okay? You didn't have to go get cash from the ATM. You just swipe your card. Done. They get a fee for that. Okay, an exchange brings buyers and sellers together. So that's where they make their money. They're not. If you go long or you go short, you win, you lose. They're there to make money on fees and fees alone, which means they don't have an alternative motive to mess with the outcome of your trade. If you're trading OTC binaries, they may have a conflict of interest. Okay? On that trade. Now they may say, we don't trade against you. We only make money if you make money. Well, that's a broker, and that may be partially true. It may be fully true. But where you're trading, the one seeing the other side of the trade, they do have a motivation to make sure you're not profitable, because otherwise how could they pay out all these massive commissions and everything else that they do? How could they do all these bonuses? And I can't speak for all of them, but what I do give you the caution of is if you're looking at something like that, you need to really look at the fine details in the print. You need to make sure you know who are you trading against, and are you anonymous to them? And what regulatory measurements are in place that are enforceable where you can see a line of regulatory action that has taken place at whoever is doing the regulation to make sure that's taken place, that those rules are enforced. So then you got the market maker. Well, the market maker, how are they making money? A market maker is a trader, just like me or you, but they basically have put up the requirement saying, you know what, I'm going to ensure, I'm going to ensure that there is a market on Aussie dollar. So I'm going to put a quote up on the bid side and on the ask side, and then where the bid and ask spread is not larger, than the floor or ceiling, I'll put a bid and offer up. So they put themselves out there where they have to make a market. They're not doing that so they can trade against you. They're doing that so what they can do is you sell at $33.50, they buy at $33.50. And then what they hope to do is somebody else will buy at $39.50 and they'll sell it to them at $39.50, and they'll make what's called that bid-offer spread. Their goal is to make that difference. And they look at all the markets, all the contracts they have, not only at Nadex, but they make option markets on major exchanges, overseas, domestically. They're trading futures, Forex, etc. There's 3 market makers on Nadex, and they're all working at hedging off their trades because they just want to make that spread. And they have to put enough spread in there to give themselves enough time, to be able to unload that risk, whether it be to another Nadex trader or maybe they're doing, some sort of credit spread over on CME, E-mini options, or whatever it is they're doing to lay off that risk. They just need enough time, and they need a little risk capital in there, because maybe they only end up making 3 out of the $6 of the bid-offer spread by the time they lay the risk off. Okay? All right. So that right there is pretty simple, but it's the players in the market. Market makers, other traders could be on the other side of the trade. You can trade inside the bid-offer spread. Nadex is not trading against you. These are some of the questions that came up today that I had some traders that are newer asking about. So who makes what money where? And so is it always there's a winner for every loser? That's a big thing. No, there's a buyer for every seller. That doesn't necessarily mean always a winner for every loser on that contract. Because maybe I buy at $39.50 and you sell at $34, and the market goes down $5 and you take profit, and the market goes back up and I take profit. Maybe I'm hedging off a future contract or a spread contract. Maybe I'm doing a double binary. Maybe I'm doing a new strangle straddle trade. I mean, there's so many different combinations of who could be on the other infinite side of the trade and what other positions they have on in other markets and other instruments. You don't know who's winning or losing. They don't know if you're winning or losing. They don't know if you're getting in or getting out. Maybe that person's taking profit when you're getting in, right? You bought at $39.50. Maybe they sold at $70. Okay? Or maybe they bought at $20. They're selling at $39. You're buying at $39. And then it goes up and you sell to somebody else. So you don't know if they're getting in, getting out, winning, losing, what their other positions are. It doesn't matter. Okay? That's the point of an exchange. It's anonymous. You got transparency in pricing, transparency in size, but anonymity into who's actually placing the trade. So that way somebody can't target you as a trader. Okay? And that's how it works at an exchange. Or how it should work at an exchange. That's how it works at U.S. exchanges. So yeah, whether it be CME, NYSE, Nadex, whatever. So an exchange is an exchange. And you can go into little intricacies about all sorts of stuff, but bottom line, that's basically the short end of how it works. Okay, without going into a 4-hour webinar on market makers and exchanges and liquidity providers and everything else. Okay. Let's see here. Okay, so to stay on topic, I'll try to pull up an example for you, Lorenzo, but main thing I want to do is I want to make sure we cover the topic described for the webinar. But we do trades every day over at Apex. But I will try to pull one up for you. We'll see if we have time, okay? I can show you examples of trades we did today, but just to sort of focus on, make sure we get all of this content out. As far as 1099s and stuff, I can't really advise you on accounting. They'll send you a 1099B. So whenever at the end of the year with your net. But and we have some stuff that other traders have posted regarding where you can go, who can help you out with your taxes, CPAs to talk to. But obviously we can't give you accounting advice. But definitely check out our forum. We have some Q&A on there, and we're resources that traders go to get answers to that. Okay. So some misconceptions. I've already talked about one of these is don't buy and hold till expiration. A lot of times we get really greedy as traders. We're all guilty of that, right? If I could buy a stock and sell it if I could buy a stock for 5 and sell it for 10, would that be an awesome return on a stock? If any of you have ever traded stocks, to buy at 5 and sell at 10, to buy at 20 and sell at 40, is that a great return? 100% return on a stock? If I could do it every day, would that be good? What if I had multiple times, multiple hours throughout the day? You don't need to get home runs every day. You need to get consistent base hits, okay? So have your take profit plan. Know why you want to take profit. Know where you want to take profit. Know why the price should be there when you take profit, okay? You need to have that plan in place. There's another thing we sort of call the dark zone. And there are a couple misconceptions on the dark zone. The dark zone is like the last 2 minutes before expiration. Like if we were looking at the 8 o'clock binaries over here, okay? And what will happen is, and you see there's 2 market maker quotes going in here. They're starting to actually simulate multi-market makers, which is pretty cool. But the last 2 minutes, sometimes, not always, now that there's more market makers we're starting to see, sometimes they'll actually trade all the way through to expiration. But sometimes they don't do any quotes in the last 2 minutes. Okay? You just want to know that up front. So you may want to make the decision if you want to be out of the trade before the 2 minutes comes up. Can you still get out on a binary in the last 2 minutes before expiration? Potentially, yes. You can still place a trade, and another trader may take it. Okay? But the market maker, the liquidity provider, is going to back off usually on making those markets in the last couple of minutes. Now, like I said, one of the market makers has been making some markets, which is cool. So they're going to get all that liquidity that's available. But, make sure you know that market. You're watching it. You're seeing what they're doing so you have an idea. But understand that very often the last couple of minutes, like that's 2-3 minutes, you can see like liquidity sort of dry up, and only if another trader takes your trade can you get out of the trade. So you may want to decide when it comes really close, is it worth holding this thing to see what happens, or I just want to be out of the trade? Okay? A couple other misconceptions. What type of orders can be placed on Nadex? All orders placed on the Nadex exchange are limit orders. Okay? A limit order means this is my limit. I'll buy at this price or less. Okay? Or I'll sell at this price or more. But I won't buy for a penny more, and I won't sell for a penny less. So if I go in, and let's just say I accidentally click the bid side, the sell side over here, to place my trade, what will happen when I hit place order? Will I get filled right away? No, it's going to go into working order. See, watch, I'm going to hit it. I'm actually going to see my order in the market right there. You can even see it. If you hop on right now and you looked at 3 p.m. Aussie dollar, 93.40s, you'll see my 51.50 trade. Okay, I'm trying to buy it at 51.50, so somebody has to sell it to me at 51.50. Okay, it's a working order, just like my working take profit order over here. If I want to get filled on this right away, I need to buy it where the market is. I can just click that buy side to update the price. Okay? And a little trick is, let's say you want to, sometimes the market will move by a tick or two on you. What happens if I put in a buy at 68? Will I get filled on the trade right away? Yes, I will. Okay. What price will I get filled at? If I put in a buy at 68, what price am I going to get filled at on the market? The market's at 57.50. What price am I going to get filled at? And let's see a few of you, see who can answer this question correctly. So if I put in a buy at 68 and the market's at 57.50, what price am I going to get filled at? All right, there we go. Okay, so now remember in your answer, it's a limit order. Limit means at this price or better. So if I say buy at 68, is there a better price available right now? Yeah. So if I say this price or better, I'm going to get filled at the better price. So watch what's going to happen. I'm going to hit a mend order. I got it at 68. The market's at about 56.50 right now. I hit a mend order. Boom, I'm filled. Look at what I got filled at. I submitted this contract to buy at 68, and I got filled at average price right there, 56.50. Okay? So I took out that one contract, right? So that's why you see 99. It'll refresh back up to 100 here in a second. Okay? But I'll get filled at the best price available for the size that's available for the price I submitted. Okay? Now, so if I go in here and let's say I put in an order on that same contract, okay? It's going to actually go blank here in a second. Oh no, 9 o'clock. Oh, we got time. Okay. That same contract, let's say I put in an order to buy at 50. Now this is a big misconception. Watch what's going to happen over here to the size. Notice how the size is at 100? So watch me put this order in. And notice how it becomes the top bid, the best price. Is the liquidity of that contract at the second, is the size 1, is that really the liquidity, or is that the liquidity of the best price available? So is 1 the liquidity of the contract, or just the liquidity of the best price available? Which one? Yeah, the best price available. If I want to see the full liquidity, just click on the contract, it'll pop up. I can see, oh, wow, there's 100 at 45, there's 20 at 44.75. I could always adjust my order by clicking on the price, and I can hit place order, see if I get filled on that. Did the market move? Maybe the market moved on me, and I can adjust the order. Okay? So, we can do a lot of different things in here. We can, adjust orders, we can cancel orders, we can whatever we want to do. But just understand that when you see that liquidity right there, that's the liquidity of the best price available. Okay? And if you want to see the full depth, just click on the ticket to open it. Now, let's look at bid-ask spread. So right now, this is pretty wide. These are not very liquid, but it'll make for a good example. Okay? If we go 54 by 45, that's like a $9. That's huge, right? $9 bid offer spread. And, it actually gets a little narrow right there. You see it being like $7 coming and going. What I want you to notice, and we got multiple market makers in here. Let me see if I can find something that's not as clean. There we go. That's better. Okay, we'll go over here to 7 a.m. because this is a little cleaner for what I want to teach you. Okay, so bid offer spread right now is like $5.50, okay, on this contract, $5.50. And, yeah, we'll close these out just to get rid of them. Cancel any workings. Okay, get that stuff out of the way so we can focus on the current example there. All right, so if I go in here and I look at the market, I'm like, okay, so the bid-ask spread's about $6, $5.50 to $6 or so. Is anybody going to sell to me at or less than $0? Would you like to sell to me for $0? Because I'd love to buy from you for $0. Right? Do that all day long. So just when I'm hits, out of 100, we're good to go. Okay? So nobody's going to sell to you for $0. That's why there's no bid. Okay? Because the bid offer spread is lower than the floor on a binary, which is 0. Or if we go up here and you got 96 on the bid side, are you going to be able to go in? Who would like to buy for $100 or more on a binary contract? Considering a binary cannot go greater than $100 in value, cannot go less than zero. Somebody out there want to buy for 100 and not have to be able to make anything and just pay fees? So no. So that's why there's no offer when the bid-offer spread is greater than the ceiling, which is at $100. Like, oh, well, those are really illiquid. Like, they don't even put a bid up. Well, that's because it would be below the floor. Nobody's going to take the other side of that trade. Okay? That's okay. That makes sense. Another important thing to understand about that, though, is look at the size, how it drops from 50 to 2. It's one of those tips and tricks, understanding that. But notice how the side really goes small. Okay? If you will exit a trade before it gets to this point where the bid offer is wider than the floor or ceiling, then you can get out with that size. Now, if it goes down to it, it may have to come back up a little bit before it'll reset to that size of 50. So if I'm trading 20 contracts, okay, and I bought them at, let's just say I bought them at $70, okay? Do I want to put my sell at 96? If I bought 20 contracts, do I want to get out at 96? What would happen if I tried to get out at $96? Would I get filled on all 20 of them at once? There's no one there to buy them back from me. Okay? Look at this. And this is a really good example. So we have 95, 96. Why would I put it at 96, which is 20 ticks away? When there's a 95 available, 20 ticks closer. I give it $1, and that's a better price. Now, do I want that contract with only 2? No. But recognize that 20 ticks is $1 difference. I can get out of that trade 20 ticks sooner if I only had 1, okay? Get that trade 20 ticks sooner by going for 95 instead of 96. Okay? Now, 92.50 puts me at 98. So technically, I guess I could go to like maybe 93.50, but do I want to push it? Right? Probably not. So yeah, somewhere around 90 to 92.50. Now, this is not a rule on a per binary basis. You need to look at what this is called the price ladder. Okay? You need to look at the price ladder and see what the best choice is. Now, you can also do this over in the scanner. So we can go over here. Let's see, what are we looking at? We're looking at 7 a.m. Aussie dollar. So I can go over, I'll check demo so I make sure my data feed matches. I'm going to click Aussie dollar. Okay, and then I want 7 a.m. So let's just get rid of, let's see, we'll choose dailies only. Okay, and then I'll say, okay, well, I need a little time there until expiration. Maybe a little more time. A little more. That'll break it down for me. Maybe a little more. There we go, 7 a.m. Okay, so right here I can see the entire price out the exact same way. And I can see it on multiple expirations. I can see it on multiple markets. You can scroll down. Okay, so it makes it very easy to see the price ladder. Just drop all your filters off, and then you can see everything. Okay, and if you want to tighten it up, just, grab over here, just grab this little slider, bring it in. Boom. Okay, very, very simple. And you can tighten it up even more. We can bring it down over here until we get exactly where we want it at. So there's a lot of little ways you can modify it, but you don't even have to understand how to use the filters. You could just literally look at the entire thing on any expiration you want to focus on and go down and up. And it's a lot easier than opening and doing all the math manually, like what is the risk, what's the reward, what's the risk-reward ratio. When you're selling, you don't have to do the inverted math, okay? I could make 26, I could lose 74, I could make, 94, lose 6. So you can do that. But also you can look over here and you can see, like, okay, is there a bid-offer spread there? Like, is there actually enough room? And we're going to be adding insights. That's one of our next upgrades that's coming. You can open a ticket up to double check it, or you can just know if there's no bid offer, there's no size, right? Like, you don't have to look at a ticket to see that there's no size. So I'm going to open it up and watch. I'm going to open up the 94 now. And what's going to happen on the 94? There's no size. So I don't have to even see the size column to know that there's no size. If there's no offer, there's no size. Okay? And to know how far I can push it, probably a couple dollars before that would go away. So just look at what the bid offer spread is, add a couple bucks to it. I want to be out by then if I have any size. Now, if I'm only doing a couple contracts, it doesn't really matter as much. Okay? But when you start getting into bigger positions, which I hope you do, all right? That means we're getting bigger sizes going. You need to know this. Okay? So it's good practice anyway. And also, I mean, you're talking about getting out 20 ticks sooner in your trade, which is a good thing. That means the market doesn't have to move as far for you to take profit. Okay? Apex Investing is a completely separate entity than Nadex. Like, I've owned Apex Investing for years. I've just been trading Nadex for a couple years. I guess going on like three and a half now. Been trading for about a decade. But no, we're totally separate. So Apex is just my little trading education company. So we got about, 7,000 members now, something like that. But yeah, we're completely separate. I'm not a broker. I don't make any fees if you trade. Nothing like that. So, place a trade, don't place a trade. Doesn't impact me. The one way I do like it is the more you trade, the more other traders trade, the more market makers come on, the tighter those bid offer spreads get, the deeper the liquidity gets. I do benefit as a trader. The more traders who are trading. But only if it's a lot of traders trading a lot of different things. So, Kelly's like, it's not a little education company, it's a big education company. Yeah, we got a lot of traders. It's pretty cool. Grown a lot. But anyway, so that's a really helpful tip. Just understanding, like, how you may want to target your exit. Okay? And as you get closer, you'll need to, double check. Maybe see, hey, do I maybe want to adjust that order to make it a little easier to hit that? Okay, because as time passes by, that'll impact the binary. I mean, this one right here, we got 20 contracts deep at 93.25. So, but do we really just have 20 deep? Oh, wait a minute, there's 25. Okay? So this one looks like 120, but again, look at it. See, that's really 120. So that's also another way to know, pardon me, if there's more depth, is if you see like two different sizes. Often that means both sizes are probably available on the depth. It's just the 20 market maker is providing a better depth, a better price than the 100 size market maker, and vice versa on the offer side. They're competing, basically, to try to get that fill, which is good. The more they compete and trip over each other, the tighter those spreads get. All right, so we can only place limit orders on Nadex. So I do have some ideas and ways that you can manage, like if you want to get out of a trade early, so you can check out our website for that. Maybe if it's going against you. And that is a good question. If you're taking let's say I was going out, I was going to do this trade for $70 risk. Okay, $69 risk at the moment. Do I have to take the total loss on the trade? So I got to hold it till expiration and take the total loss if it goes against me. No. Okay, max risk does not have to mean the risk I plan on taking. Now, it won't get larger than that. I know that. That's a fact. But I could get out of the trade. So, who can tell me what the price of a binary is going to be worth if the market hits my strike? So if the Aussie dollar, or Aussie yen in this case, comes down to 95.60, what will that binary contract be worth? Yeah, $50, give or take a few dollars, right? So if I open that up and look at it, I can see, yeah, it's a little bit below right now. That's why it's a little below 50. And when I say 50, I mean the mid price, okay, like the average of the two. So it's a little bit below 95.80. So right now we're a little bit below 50 on the mid. We're at about $47, $48 right there on the mid price, okay? So if I know I can get it at 50, and I know that the bid-ask spread is about $7, add $3.50 to that, I can probably actually get out at about $53.50, okay? Right when it hits it. Or on the flip side, maybe 40, what would that be? $46.50, okay? So if it's a bit. So if I bought at 70, I could probably get out at $46.50 on the trade, which obviously limits my risk quite a bit. And then I could maybe get out of the trade when it hits, say, 90 or 94 or 93, just depending upon, like, right now on this trade, 93.50, it's a liquid price. So I get it at 69.50, could get out at 93.50, could get out of the trade if it drops down to 47.50, which would happen if the Aussie yen dropped down to 95.60. So max risk doesn't have to mean total risk. I don't have to sit there and just let it, like, take all that money out of my account. Okay? So that's on a per contract basis. So I'm not quite sure what you mean down on always 100. The maximum value is always 100. But, and I'm talking about when it expires. I'm talking about while the market's open, when it's moving around. So like right here, we're almost up there. We're almost up to 95.80, okay? And notice it's almost right at 50. It doesn't matter if there's 5 minutes, 5 hours, or 5 days until expiration. I can count on that mid price being right about $50, which means I can get out of a trade that's going against me, a losing trade, without taking the total hit. Now, when a trade goes out of the money, okay, man, that time decay can go fast. Okay, it can go from like 40 to 30 to 10. It can go from 40 to 10, like in a matter of 5 ticks, 2 ticks, 3 ticks. Okay, but I can count on when it hits that trigger price that I can, being like 95.80, I can hop out of that trade, and therefore help limit my risk. Okay, now I can't do that with a working limit order, because if I put in a limit order right now to sell at $47, what would happen? Actually, sell at 47 wouldn't do me any good. If I was on this trade right here, if I put an order in to sell at 47, right? And I had a sell in for one contract. Sell limit means I'll say at this price or higher. So I'd get filled right away, wouldn't I? So I can't just put the order in. I'm going to have to get out when it gets to that price. Okay? So it's important to understand that. Otherwise, you're like, I keep getting filled, and I keep trying to put in this, and So if you want more help on how to do that type of order, then just let us know. But we have a pin program that's pretty cool. It's free. We didn't make it, but where you can tear off the ticket. See this right here? You can click pin to top, and now when I'm moving around, open up another tab, then my ticket stays right up there. Okay, very helpful. So, but yeah, that'll definitely help you out on managing those tickets out of the window there. Okay, what is the probability? Everybody likes these cheap binaries, right? What is the probability if $50, which is the reason it's priced at that, is there's a 50-50 probability if it's at the strike, that it'll still be at the strike as of expiration, right? Because it's 50-50 because it's right at the strike. If price is a reflection of probability, what is a $6 binary reflective of on a buy? What is that reflecting? Yeah, 6% probability that it'll be in the money as of expiration. Okay? Now, or a 94% probability that it will lose if you held it to expiration. Okay, that's accurate. So, probably not the best choice of a buy and hold. Now, if the probability is that being that at expiration, do you think the probability actually might be a little bit higher of it touching it? Not staying at it, but touching it. Do you think that probability actually might be higher or lower? There we go, higher. Yeah, it is higher. Because if it can get to it and expire at it, it could definitely touch it and come back down. There's a higher probability of that happening than just getting there and staying up there, right? So there's a higher probability of it touching it than there is of it expiring there. Hence the idea of getting in and getting out before expiration increases probability. Because once you get out, you don't have to worry about if it goes against you, right? Now, doesn't mean that you're more likely to be, maybe instead of 6%, maybe it's 8%, maybe it's 9%, whatever. It depends upon your trading system. But that's why we get out before expiration. Watch out for anybody who tells you otherwise, because you really want to be thinking about that whole, like, if it's 6% and I won 94% of the time, I'd make $6 on each one, and I'd lose $94 on 6% of them, and guess what? I'd be break even, not accounting for any fees or spread or anything else. So you really have to learn to exit before expiration to be a successful trader when you're trading options. That's just part of it. Okay? And it may work for you for a while. It might work for you for a week, it might work for you for a month, it might work for you for a quarter, but year in, year out, the probabilities are right. Okay? They're the reason that price is that price. It's not some randomly picked price. So it's the delta of a call option, which would match the probability of a option expiring in the money. We can go into a lot of really detailed stuff on this. I've covered this in other webinars, but that probability is huge but it's the probability of expiring, none of it touching. Okay? So Ed, you say you have trouble knowing the value in a trade. Can you be a little more specific by what you mean on that? So we may have a much higher, if you answer, I'll come back to you. Okay? So I may be a lot better off buying this $20 one and selling if it gets to my strike, right? I only have to move 40 pips. Maybe there's only 20% probability of expiring there. But, I mean, of the market moving up 40 pips, there's actually a really good probability of that happening. How good of a probability? Well, one of the ways that I'll figure that out, and we got a lot of ways, but I may go over to a deviation. And I'll go on Aussie Yen, right down here. Get the Aussie, get the Yen. Basically, about a 70% probability that it'll move 34 pips on any given day, at least today. So that's the probability up to date based on the implied volatility, the expected move built into option prices. So if there's only that's 34 pips from settlement. So this would have to move about 40. So I may have to even exit before it gets all the way to my strike. Maybe I'll have to exit at $40. And so that gives me an idea of how far the expected move is. Okay. Where did I find that? I found that right over here. Now this isn't at this given point. It's as of settlement. But it's under deviations in the scanner. You can also just go to current deviation levels right here. And we display these. They're updated every day at 8:30. Okay? So we'll have new ones here for tomorrow here in a few minutes. Or sometimes they're updated before then. But at least by 8:30. Looks like we already got the ones for tomorrow up. We're ahead of schedule. How did I get the 70? That would be understanding what deviation levels are. If you just go into deviations and then go down to deviation level information, it'll talk to you about what the probability of a deviation is. And I talked to you about the percentages. Like a one deviation move is a 68% probability it will not break out of this level. So that's where it comes from. Now, the other thing I can do is I can go in, I can use like expected moves. We actually have expected moves for every hour for every single market that we plot on our charts. Expected volume, so that we can see if volume is higher than normal, if it's more likely to break out of that expected move on each hour. So little things like that really add up to have proper expectations. Like maybe you have a chart up, and on your chart, you're like, I think it's going to hit this price based on all my analysis. And maybe you're right. Maybe a lot of times you're right, but that stinking binary seems to expire every time before it gets there. Do you have the proper expectation of how long it should take to move that far? That's where something like expected ranges would help you out. Because I had a trader the other day say, I think it's going to get to here. And I'm like, well, I don't know if I'd say it's going to get there, but let's just say it was. And when I went in and did the math, I was like, we're looking at about a 4.5 hour move. So using the current hour binary, probably not. Using the 4.5 hour binary, and I said, actually, I think it's more likely to get here based on volume. And it did actually get right there. It got there within 4 hours. So knowing how long it's going to take something to move will help you choose that correct expiration. So that way you're not just right about direction, not just right about how far and where it's going to go, but also how long it's going to take to get there. Let's see here. What else do we got here? The deviation levels are not high to low. The deviation level... Well, yeah, actually it would be high to low. You're right. Sorry. Yeah, so deviation level is high to low. 70% of the time, it should stay within that range. So don't be... 30% of the time, it's not going to even break out of one deviation level. And if you just plot them on the charts, you'll see that time and time and time again. So they auto-plot on the charts with the toolkit. Let's see here. So, let's see, Ed, back to your question. How much can I make at any given time? Do you mean on like one contract? Or do you mean... a binary is worth $100. Whatever your risk is, the difference between $100 and your risk is the maximum potential profit that could be made on that trade. So I'm not sure if that's what you're asking, but that's the formula. So the max potential profit, now again, that's if you held to expiration, which I don't recommend you do, but if you held to expiration, That's how you would know what the max potential profit was on that trade. Is that what you're asking about? Let's see. Some other questions. Is there an advantage in demo? Yes. Okay. Take advantage of your demo account. It amazes me, and I mean almost every day without fail. And I hope you're not the next person that sends this to me. Okay. Yeah, I put some money in. I really needed to make money and get going, and yeah, I lost a couple grand, or I lost $500, or I blew out my account, or I'm down 80%. Or don't be in such a hurry to make money that you lose all the money that you have to make money with. Okay? Yeah, but it's not real to me unless there's some action. Right? You hear that? I need to learn this, and I only really learn if it's real, if it's live. These are all excuses due to greed. And I'm not saying not due to need, but your need has nothing to do with your ability to make money. Okay? Your need has nothing to do with your ability to make money in trading. If anything, it'll actually inhibit your ability to make money in trading, because you'll make decisions based off needing to be right versus trading correctly. You'll hold on to that trade that you should have got out of when the strike was hit because you can't afford another loss. You'll go in and you'll put way too much money at risk because you got to make that money. Okay, you need to make it. You want to quit this job, you hate it, whatever. I mean, whatever the reason is, it doesn't impact what the market's going to do. People go, well, it's not really real because demo and emotions and live that's totally different. I get it, but so is playing an NBA basketball game or an NBA practice, right? Totally different emotionally. But can you imagine an NBA player who never practices being a top star, winning a championship? No. Okay? They practice and practice and practice till it's muscle memory. Till when this happens, I do this. When this happens, I do that. They don't have time to think about it in the live market. They don't go test out the new play for the first time that they thought up and scratched up on some paper and go see, hey, let's see if all my teammates get it and if it all works out in a live game. Okay? You need to know what it is you're doing, why you're doing it, how you're going to respond to different situations. Not just how to dribble the ball, but how to execute the play from beginning to end. Okay? So, and you should practice, Scott says, you should practice like you would play. Always like what a coach says. Exactly. I know Deion Sanders, played for the 49ers and the Cowboys and, all that. Like, one thing he would do is he would actually, every time he caught the ball, he would run to the end zone, even if they were doing, like, little 10 and 20-yard passes. And his teammates thought he was nuts when he did this. But he kept running them all the way in. And they're like, why are you doing that? He's like, if I don't make it real, it's not real. He's like, I need to be ready to, I don't plan on making a 20-yard catch. I plan on running an 80-yard catch, a 20-yard catch into an 80-yard run and running that thing into the end zone. One of the best players whenever he was playing. And his teammates started doing the same thing. It caught fire, right? And they started doing it and led to a championship. You want to make it real. Don't go in there and like put in 10 grand on a trade in your $20,000 demo unless you're going to do that on a live account, which you shouldn't do either. Right? Make it real. Trade the same size as you would trade. Manage the trade. Work through it. Make yourself be profitable so you can last. So that way that money comes in that you have saved up and you actually have it and you got to make the mistakes with the free account. Yes, it will be frustrating on those days when you just cleaned up in demo. You're like, man, if I'd been trading live, I would have made all this money. Da-da-da-da-da. One, would you have traded the same way? And two, don't forget, we were really good at forgetting about all those days where we would have lost money. Okay? So trade it like it's live, but in demo, get it down so you have the money to come in tomorrow. Okay? It's like, yeah, but look at this. It's 70% or 80% probability. That's another big misconception. Okay? I'll have trades that I have a probability marker on, 70%, 80%. That doesn't mean the trade has an 80% probability of making money. Okay? Think about that. Right here, this trade has a 72% probability of expiring in the money. True or false? Okay? This is huge. False. This trade has a 50-50 probability of expiring in the money. Okay? It has a 72% probability of expiring in the money over 100 times. I mean, if I go in and I buy a $72 binary 100 times, 72 of them should expire in the money. But there's a 50-50 of whether this one's going to be one of the 72 that expires in the money or one of the 28 that doesn't. Okay? If you'll accept that fact you'll come to a great realization that'll make you not go in and risk insane money on expensive binaries because you think you have a 72% chance. Because you know the next 28 may be the ones that don't. Okay? And is that probability low? Yeah, but again, it's the probability over the course of 100 trades, not of this one trade. Got it? So over the course of 100 trades is probability, not, or 1,000 trades, whatever your model is. Not over the course of one trade. One trade is 50-50. Even though, yes, I know it's already above the market has to come down. That's why 72% of that will expire in the money. Okay? But it doesn't mean this one will. Maybe news is about to come out on the Aussie. It's going to drop the thing down like a rock. That would definitely lower that probability, even though that thing is priced at $72 right now, wouldn't it? Okay? Like one of those 28 that don't. So really getting down probabilities, but understanding probabilities are not on a per trade basis. They're on the course of trades. So manage risk appropriately because you don't know which one's going to be in which bucket. So the 28% losing bucket or the 72% winning bucket. Okay? All right, so let me see what other questions I got here, and then we'll wrap it up for you, okay? Got a few outstanding questions. Ed, I'm guessing I got your question. I answered you, but I didn't get a reply back, so I'm guessing I answered it for you. If not, let me know, okay? Based on your experience with Forex, binaries at least, binaries are stable enough. I know they fluctuate, but within a specified range. Sorry, not exactly sure what question you're asking. But, yeah, I mean, every market actually has a very specified range by every hour. So, and that's something that, we like to take advantage of. Right? When volume's really high, it may break through that range. So, like, we'll actually plot out how far we expect the market to move on any given. That's what these little green and red boxes are. So most of the time, you'll notice it stays plotted for the last 20 days. We can plot them further back, but 7 days. You can plot them all the way back if you want to. But that's the expectation of movement on any given time frame. See if I can pull up a time-based chart for you. That's a diagnostic chart. Let's see here. Yeah, this basically shows me like how far should I expect it to move. So I don't go in and just buy some binary that's wildly out of the money when there's little to no probability. It hasn't been hitting that. We're below volume. You want to have proper expectations when you trade. And I've talked about this quite a bit in some of the other webinars about having proper expectations on movement, proper expectations on volume, and how that will have a massive impact on your ability to be successful in trading because otherwise you just have this, everybody wants everything to fly up, to the moon and, go down to the other side of the earth type thing. So... will be practicing with a 10 or 20 or 30 or 50 or 100 contracts in demo be close to real and live, or is it far off? It'll be close because everything's a limit order. If there was market orders and stop orders, that'd be a little bit different, but since you're actually using a limit order, it'll be very similar. To see the differences, just open them up side by side and you can look at the depth of market. Often I'll see deeper depth, obviously, in live than demo because they have multiple market makers in there. And you can look at the prices. Prices are usually very, very similar. But at the end of the day, I mean, you need to look at what's in the live market. There will be differences. They'll be similar. But obviously, when it's live money, then there will be a small difference. It shouldn't completely make or break your system as far as if you were executing it the exact same way. But it will, obviously, if there's 100 more contracts available because there's another market maker and they're tightening up the bid-ask spread, so maybe you can get a better price, So Jack Welch states, I'd rather know money slowly by knowing what I'm doing than lose it quickly because I don't. Very wise. Let's see here. Let's see. Same example I gave in the MVP training video. I'm not sure. This is a live market, so it can't be the same in any of my videos because that's today. So it's not the same example as in the MVP, but maybe the same concept. That's what you mean? So, yeah, I mean, that's a very big, long trade. So right there. But, that's not really the focus on that chart that I'm trying to bring up. I'm trying to just basically show how it's staying inside the expected move. And then what we do is we actually pull out the high to the low, the expected high to the low. So not just like it went up in the green and down to the red, but it actually the high to the low price. And that's what that orange bar is. Like how far do we expect it to move in that given hour. That helps a lot with not overshooting your binary contracts too much. Okay, so if we put 100 on it, 72 will be in the money. Okay, yeah. If you did 100 trades, yes. That would be the statistical model. Obviously, statistics are statistics, right? And they're right, statistically the majority of the time. Like, you can make up whatever. But, yeah, the prices are based on, they're very good at their pricing models. So, does time improve, Carrie asked a great question, does time improve probability? It depends upon what trade you're doing, okay? So if you're in the money, time would actually improve your probability because the binary option would decay faster. The premium would go down really quick, okay? If it was staying flat or in your favor a little bit, maybe just for a few minutes, and boom, you've made your money, okay, on a few ticks. If you're a little bit out of the money and it moves a little bit, boom, you could actually do a lot better. If you're choosing for a bigger move, obviously the more time you have for movement, the better. If you're wanting to stay range bound, obviously the less time you have, the better. So, but that's a great question. Yeah. So basically, time will help you for a larger move that you need to happen. It will hurt you for a range bound move that you don't want to happen. And it can highly increase the speed of the change of the binary. I actually have a whole video or a whole article on that as well about how the binary price changes. With time, with implied volatility, with other traders. So all those articles are listed. How did you get to that chart? That's remember at the very beginning of the webinar I talked about how you can get access to charts. Right here under questions, Apex investing courses, and I go into like getting free data feed set up, getting free chart set up. So, let's see here. Mark, you say how to read the chart. I'm not really going into reading this chart right now. We're not doing chart analysis on this webinar. I'm just going through binary misconceptions. But I'll be happy to do tons of chart analysis with you on Thursday. We would stay on here for hours, which honestly I don't mind doing too much, but some of y'all want to go. I know I still have more to go in my training, but I'd like to know the charts to use and the things I can try tonight after learning. The first thing I'm going to suggest you do is make sure you get the basics down. Okay, so education, Nadex, basics. Just get that down. Second thing I'm going to suggest you do is go through and watch the help videos and all that in the scanner. You can go to the forum. It's probably one of the best places. Just go directly to the forum. Go to scan. You'll find the scanner that's going to help you sort of get this down really quick. Okay? And then from there, if you ask us over on our website, I can sort of tell you what systems that I prefer that I think you should start on. And we have a couple systems that most people usually start on right away. If a trade caps at 1944 and I close it at 1935, what if the payout if it's at 1944 is 100? What if the payout at 1935? Well, go to the scanner. Go to binary scanner. It wouldn't cap at 1944, okay, because that's not how a binary works. The binary would cap at 100. So, but you could go in here and you could choose whatever market you wanted to. Say if we had just Aussie because it's up right now. And we can go to the simulator. And we can say if it goes up to, I don't know, actually we'll just do simulator range. And I'll just go in here and I'll say simulate the 40 pip trade. Okay? So if the market moved 40 pips right now, how far, what would the price be of the binary contract? And that'll actually tell you the estimated price on a 40 pip move. If you wanted to make it lower, you could just drop it down and hit, 77 and adjust the price accordingly. So that's probably the easiest way I can answer that question for you, Ed. Is just use the simulator. And I think that will help you out. James, yeah, there's a lot of indicators you can, as long as you have a system that's working for you, then yeah, rock on with it. I've tried using some of the indicators you're talking about. I haven't seen the consistency that I've wanted. So they look a lot better. They look really pretty, but not quite as good as I would hope. But I'd be happy to work out a strategy with you on it. Just come over to the forum, come to the help desk, contact me in the help desk under questions help desk, and I'll be happy to work out something with you. Okay, help you develop that. Let's see here. How do you find the indicative index symbol again on any of the scanners? Just at the top, it'll have that right there. Okay, or you can just go to Nadex information and we list all of them. So right there, current underlyings are listed. Now these are NinjaTrader or like Thinkorswim or other platforms like that. We list a couple different symbol formats for you, but where you can use that. And then let's see here. What are your thoughts on using? Okay, so another indicator is technical analysis. EMA, technical analysis is your personal strategy. Which do you apply? I don't use EMAs. EMAs are a lagging technical indicator based on previous price movement. By the time they turn, they're too late. It's the first thing I learned in trading. It was the first project I was given by one of my mentors. Is basically take two EMAs and cross them over and all that fun stuff. It's sort of, and I don't mean this in a negative way, it's trading 101. He showed it to me so I could go through it. He made me practice like literally 1 year of data on like the entire NASDAQ 100, all 100 stocks. And it was to prove a point to me. And I didn't know that when I was doing it. I felt like, like Danielson here, wax on, wax off. And the point was, it doesn't make a difference because by the time the things cross over, they're just going to, like, the great ones you catch are going to be crossed over by the ones that chop like crazy. So I do like using the EMA for a trailing stop, like 8 EMA. I love using that on a trailing stop. That's one of the methods that I'll use. I base all of my analysis on one pattern alone, and that's it. So I'm not doing it based on 45 different patterns that are out there. I literally just use one pattern on all my trades. And it's basically the pattern I was taught by market movers and floor traders on how they move the markets, what they do to move the markets. And it's every pattern I've ever seen is inside that one pattern. So, and then, like, this is it right here. This is oil today, my room, and it's just, if I zoom in for you as much as I can, you'll see like AAP and then like EX. So alert, pivot, entry, and then completion, and then we are trailing the stop. How'd that end up? Because I was looking at tightening it up at 1.5. Let's see here. Yep, went up to a 1.5. Actually had a little run right there at the end, but we pretty much stayed flat. So I use one pattern. Yep, apex pattern. And it's just alert, pivot, entry, and then confirmation. It's not exit. You can do exit if you're doing what's called a profit popper strategy. But all traders come in and they literally just, they enter when there's an E, and they'll buy an into the money binary, either in the money or out of the money depending upon where it's at. They'll hold it till the end of expiration. So they'll do like the 10 a.m. right there. They'll come over here, boom, they'll do the 11 a.m. and they'll do the, well, there's not one, but 2:30 I guess they could do right there, if there was one still. But so there's like 3 or 4 trades right there that day, today, on just simple binary strategy. You could do spreads. There's a lot of ways to do it, but you could target the 1 deviation level by end of day once you had an apex long. You could trail it up. So there's a lot of cool ways that we teach. There's scalps every time the volume breaks expectations, this orange line, and the bar closes up. Then we do a buy for like $20 out of the money, sell when it hits 40. Just rinse and repeat again and again and again. So, and so yeah, I mean, win percentage. It's going to vary. So it depends upon what kind of trades you're doing. I have Apex entries, I have Apex add-ons, I have MVP reversals, I have BMX reversals, I have momentum scalps, I do boomerangs, I do strangle straddles, I do binaries butterflies, I do straddle condors. And so it depends on what strategy you're doing, depends on what time of day you're doing it, depends on what market you're doing it on, depends on if you're following the rules. It is sometimes on some strategies I have a lower win percentage, but I have a very high payout. Okay, Like I'll do these massive magnet price trades. We did one the other day on a radio show, me and Tommy O'Brien, and I put like $800 up, and I want to say we made like 4 or 5 grand on that specific trade. But in a matter of about an hour. And that's under our volume section in the forum. I talk about that and gave the webinar and all that stuff for it. But those trades don't win as often, but when they're profitable, they're very profitable. I have other trades that win a lot more often, but they're about a 1-to-1 risk reward, but a little higher probability. So it's just you always got to balance. So many people, that's a big misconception in trading. People are like, how often do you win? I can show you a trade that wins 90% of the time. But if you make $1 every time you win and lose $10 when you lose, it doesn't matter. You're still negative. You can show you a trade that wins 1 or 10% of the time. But if you lose $1 every time you lose, but make $10 every time you win, you're actually going to be net profitable. So what do? I want to balance the two, right? I want my probability and my profitability to come together. So, but it's not that hard to figure out the percentage mark. So you can hop on there and load it up and go to town. Let's see here. And yeah, can you mentally trade? Yeah, the lose 90% of the time and make money 10% of the time. But yeah, can you follow the rules? And so that's what Apex is about too. Is actually it's not just entry management, risk management, profit management, but it's also like, is it built in a way that you can follow the rules? Because some trades work really well, but like turtle trading, very tough to do. It's actually had the turtle system has had a really hard time over the last 9 months. But it's not my system. It's been around for a long time. But very, very tough to do it. But when it works, man, it makes a lot. But you have to have a lot of losses. But when it makes, it may lose 10 cents when it loses, but it makes $50 when it wins. Okay? So the idea is to design a system that you can do day in and day out consistently, and you can keep with the rules without trying to change them every 5 minutes. So yeah, that sanity part. Let's see what else we got. I think I got every question. Do you need MVP for the line color to line up for the profit popper? It depends upon how you're doing it, Kevin. So you're doing binaries, you're doing spreads, you're doing nighttime, daytime, you're using 4 minutes, you're using diagnostic bars. That's when you're going to have to ask over in the forum with a screenshot so I can go into the specific example with you. But I'd be happy to help you out. Okay? But a lot of times I will not have it line up for profit poppers. Now, there's 2 types of profit poppers. If I'm doing diagnostic profit poppers like this, yes. Meaning on the diagnostic bars, it has to line up. Okay, and that's the simple in the money, out of the money trade. If I'm trading at night when the market's barely moving, it's not going to line up. The market's not trending. It's flat. So that's when I would, so diagnostic bars, yes. Time-based bars, not necessarily. So I got to look at the specific market to answer you on that, okay? But if you're trading during the day on binaries, diagnostic bars, yes, I want them lining up. If you're going to time-based bars at night, then it depends on the market. And just open it up and look at it and see. You'll be able to tell really quick whether or not it's a good idea to make them line up. Because a lot of times it'll filter out all the good trades. Because the market's so choppy at night, which the whole point of the MVP line is to filter out chop. So, but if you're only looking for a profit pop, or you're not looking for a trend, then that's okay. But if you're looking for a trend, then that's not going to be a good thing for you to filter out all the chop, right? Because you want some of that chop. So if I go over here and I go to say euro dollar, and here, let me load this up. Your dollar's probably the best example on top of that, but let's see here. What do we got? 4 minutes. Okay. And then I'll go into this. Change my volume down to 4. Change my minutes down to 4. It's calculating every single minute of the last 6 months, so it takes it a moment. And then, okay, yeah, so we got 4 and 4 and everything. All right. So I'd go over here and basically it's like it's just so flat. But is there anything moved? There's no trade right there right now. Let's go. Let's look at something else. Try dollar yen. We'll try pound dollar. Something that actually moves. Euro dollar is wretched for moving at night. And everybody loves to trade it for some odd reason, but it's one of the hardest things to trade because the more people who trade it, the sloppier it gets. All right, so there we go. So in this case, the apex actually did line up with the MVP, so that'd be a short, right into the end of the hour there. So short, and you have to be probably in the money on this because I doubt there was an out of the money because you only got a couple ticks there. But so right there, then you get your AP. Boom, you got to sell that one. You might have got an in the money because they're only 5 ticks wide. I mean, out of the money. So you might have got a $20 one right there. You can take it out when it hits it, or you could hold it. So in that case, they lined up for tonight's trades right there. Those are the 2 trades so far. Trying to see if there's any other one yet. Yeah, but it's flat. See, it's basically saying flat. That's why it's chopping back and forth. But then we finally get a trend, and we get an apex. It lines up. I hope that helps a little bit. So we can definitely do more of these for you, though, on Thursday if you want to. Let's see. I think... Do I got anybody else's... do I have any questions outstanding? I like to make sure I get them all. I know y'all spend your time to come on here and learn some new things and also to get some questions answered that maybe have been just out there. So any more questions left that I can help out with? All right. I think I got them all. If I didn't, please hop onto our website. Post it on the forum. I'll be glad to help you out and answer any questions that you have, okay? All right, y'all have a great evening, and I'll get this posted up for you under education, webinar recordings, and then Series 3 we'll tweet it out. So follow us on Twitter. We'll send out the tweet to it and get you all going. All right, y'all have a good week.